After the phase of mega funding and frequent upward revision of their valuation, the Indian consumer internet companies are now facing a serious scrutiny on their growth projections, on their unit economics, and valuation. Well, the Indian consumer internet companies are not the non ones. The hot tech companies, the Silicon Valley startups such as Uber, Snapchat, Dropbox, all have faced markdowns on their valuation by the mutual fund giants who have invested hundreds of millions of dollars into these companies. The mutual fund giants who went after these fast growing startups have created an inflation on their valuations. Now, having seen that many of the tech companies who went for IPO are trading below their IPO prices, these mutual funds have started to mark down on the valuations of their unlisted assets as well. This has a bearing on the Indian startup ecosystem as well, but that's not the only factor that drives down valuations of the Indian internet companies. In one fact is that there is a realization that's creeping in that the Indian urban upper middle class, which is the target audience of many of these new age services and products, are not growing the way that the Chinese urban upper middle class has expanded. Not just that, many of the Indian consumer internet companies who were poised to be the leaders of their respective segments are now facing tough competition from the global companies which are operating on the same space. For example, Flipkart is facing tough challenge from Amazon, and Ola is facing tough challenge from Uber. Well, this is a many of the startup mentors and evangelists and many of the experts in the ecosystem are saying that this is time for a reality check, for a harder focus on the sustainable growth models and unit economics metrics. Uh, the founders have downplayed, have chosen to downplay the impact of the markdowns and are determined to prove the naysayers wrong. But the fact remains that it's a reality check.